What's up, everybody? This is Investing Sensei here to bring you episode 129 of the portfolio update. So hopefully you guys are doing awesome. I definitely am. I think this episode is going to be really awesome, especially to film, especially because we're obviously going to go over the portfolio. So how the portfolio performed this past week, what we actually bought, what we sold, any dividends that came in, and then we're obviously going to kick off the scripts, coming back, seeing how much our dividend snowball grew. Remember, every Sunday we come back and we check on how this snowball continues to grow, no matter what the portfolio is doing, what the market's doing. We see this every single Sunday, so definitely make sure that you follow along. Make sure that you're subscribed to with that bell notification so you're notified when I upload these videos as well. Remember, our goal is to try to reach $6,000, not $6,000, but 6,000 subscribers by the end of the year. So definitely do your part, and if you're new to the channel, be sure that you're subscribed with that bell notification. While you're down there, be sure to drop a big thumbs up on the video. It helps out the channel a lot. As well, we have these other goals that we are continuing to work on for 2022. We will see how that progresses, but overall I think a lot of those we will achieve. But quarterly dividends, guys, you'll see this continue to go and up and up and up. That is very awesome. You guys already know we're working on Q2 of 2022, so it's very exciting seeing this come forward as well. We are going to be getting dividends for the month of April coming soon. Remember, these are the ones that we are projected to get for the month of April, so it'll be very exciting. I have scripts for all of this stuff for free. Remember, check out the video links, and then just drop a big thumbs up in return. That is all I ask. But overall, guys, what we do plan to do is, as well, I'm going to go over the portfolio, figure out how much we grew that snowball, and then we're going to wrap up the video by answering subscriber questions. So we're going to do a Q&A session, and then you guys actually left me some questions last portfolio update, so I believe I have 11 questions that you guys dropped in the comment section. If you guys do enjoy these type of content, with the Q&A, let me know in the comment section so we can do this more often. Maybe I could do it once a month, or I could always pick 2 to 3 Q&As every single week, and then I do those on Sunday at the end of the video. So let me know your feedback on what you guys would like to see. Definitely really want to improve these videos over time, so yeah. But anyways, let's go ahead and get started. So first thing is, the portfolio is at $202,906.82. Overall, we are up about 81%. But if we look at the buying power, we have 0, nothing invested right now, ready to go next week. But we continue to dollar cost average. We contribute $100 every single week, no matter what the portfolio is doing, to continue to grow that snowball. But if we look at the value over time real quick, you'll see over the 1 week we are actually down about 2.54%, which is about almost $5,300. But if we look at the 1 month, we are actually finally up. We hit it down on March 14th, 187,000. And we have actually started recovering, and then we've gone back down, but overall we're up about 6.89%, which is about 13,000. If we look at the 1 quarter, we are still down about 4.82%, which is about $10,000. And you're seeing this volatility, guys. This portfolio has just been very volatile, and it is because I'm very heavy invested in tech, and tech has been very volatile lately. If we look at the 1 year, we are still up 17.06%, which is about 28,000, almost 29,000. And you'll see that the trend is going upwards, but overall it's been a very volatile ride on the upwards direction. But remember, our snowball continues to grow, get bigger and bigger, no matter this volatility. If we look at the overall, we're up 81%, which is about 80,000, almost 83,000. And the trend is upwards over time, and that is what we're going to continue doing. We're going to continue dollar cost averaging, no matter that portfolio value, and over time I think we will continue to build this net worth, and it'll be very exciting because we'll be able to retire very soon. I guess not very soon, but in a couple years. So we will see how that plays out. But let's go ahead and jump over here to the activities so I can actually show you guys what we did this week. So if I go ahead and start the date. This was actually April 4th. So if you'll see, we got actually a referral bonus. So somebody was able to take the opportunity to sign up with my referral link. They were doing a promotion of $50. So if you signed up and deposited $100, I got $50, the person got $50. So that was a 50% return on their money. So that was a pretty great deal. I believe they're doing $10 now. So you know, I was promoting it this past month if you guys were interested in signing up, but you know, $10 isn't that much. But overall, thank you so much for whoever signed up. If we look at April 4th, I also deposited $94.21. $60 were actually to buy some of the stocks that had paid me out dividends. So you see we did 3 buys, $60. And so we bought $20 of Pepsi, Union Pacific, and Waste Management. These were companies that paid me in March. So remember, every time a company pays me out a dividend, I will contribute an additional $20 towards that company so that the following quarter they pay me more. I did, you know, some people actually contribute more than that. They contribute $100. There's one subscriber that actually buys 1 full share, so it's very, very cool. That snowball must be compounding even faster. But you know, you could add an additional $1, $2, $5, whatever is available that you guys can manage to do. It's just a great way to aggressively grow your snowball much faster if you can. But you'll see on the 5th, I just paid off the last interest of my M1 borrow, which I'm completely I have no more M1 borrow on this account, so it's very exciting. I went ahead and paid it off last week. But you'll see we did 1 buy with the $50 that somebody signed up. We bought Starbucks, $50 of Starbucks, so that was pretty cool. And then we deposited $100 on the 7th of April, and then we did 2 buys. So we bought Home Depot and Target, guys. So remember, my 3 companies I am excited to buy in these coming months. So check out, I'll try to add, remember to add a pop-up link to check out that portfolio update where I cover those companies that I plan to buy. But yeah, guys, this is actually everything for the activities. Let's go ahead and jump over to the Google Sheets. I'm trying to speed through this so that we can get to the Q&A, because there are 11 questions that you guys did ask, so I want to make sure I can get to those and not make this a very, very lengthy video. But you'll see that I went ahead and already made a copy of this, and we are ready to go here. First thing we're going to do is go to dividend payout, see if any companies have declared out a dividend. So you'll see 46. We'll go over here to portfolio tools, get latest dividends. This takes about a minute or so, or maybe a couple seconds, not a whole minute, but it'll wipe this and then it'll regenerate everything, see if any new companies declare dividends. So we will see that, guys, and it looks like there's actually nothing. So we are still waiting for these companies that will be paying out, so it'll be very exciting. If we go over here to settings, guys, and we actually delete this. Again, I do have tutorials for all this stuff if you guys are interested. Let's jump over to personal capital. This will grab the latest version of our portfolio so we can see how much the dividend snowball grew. Alright, guys, so we're here at personal capital under my M1 account. If we see, there's going to be a green button here. What this does, if you click on it, it copies the content of the clip, or I guess the content of the portfolio into the clipboard, which then we can jump back over to Google Sheets, right click, paste special values, and that is the new value information from our portfolio. And so we can actually jump over here to holdings and click portfolio tools, update portfolio holdings. What this is going to do is going to wipe everything and use that new version we just pasted. So click on that, this will get wiped, and then we can see everything start recalculating. So we will see how much we grew the dividend snowball this week. Looks like it's done, guys. Dividend yield has actually gone down, and then actually, oh sorry, it's gone up, and then yield on cost stayed the same. And then yearly, we've actually gone up to $3,141.59 compared to last week of $3,137.11. For the month, you'll see that we are projected to make $261.80 compared to this, which is about 40 cents or so, 37 cents that we've increased it, which is actually pretty great. And then for the week, we've gone up about 9 cents, and then this for the day we've gone up about 2 pennies. For the hour, we're still making about 36 cents every single hour that goes by. And then hourly work wage, we are projected to make $1.51. So this is if our portfolio was to go work a 40-hour work week. They would get paid at an hourly rate of $1.51 every single hour. We are going to try to eventually get this to minimum wage. We will see how long that takes, but that is the update, guys. I think it's a great opportunity to go ahead and jump over to the Q&A, which is, I think, is the best part that I've been waiting for this past week. So let's go ahead and get into it. Alright, so the first question, guys, is actually going to be what is your field of work? And actually, before I do jump into the answer, I will be trying to speed through some of these questions because we do have 11 questions. So definitely let me know in the comment section if you see a very interesting question that you want me to actually dive into more, or just go into more detail and I can make a follow-up video on that. But definitely let me know your feedback in the comment section. And while you're down there, be sure that you're subscribed with that bell notification if you have not done so already, and drop a big thumbs up on the video. It helps out the channel. That is all I ask in return. But my field of work is actually software development. For anybody that is studying that, definitely continue going through those hard late nights trying to figure out why your programs don't work. It'll definitely pay off in the long term. Anybody that is considering it, it's a great career to have, and then it'll bump up your salary, and hopefully it allows you to reach fire much quicker. But let's go ahead and move on to the next one, guys. The second question, guys, is actually, when did you start this journey? So I'm assuming this is the dividend investing or just investing in general. My journey for investing actually started in 2019, I guess January of 2019, right after the 2018 correction that they had. I started dropping a little bit of money, and I continued to invest. After I got some confidence, I started buying more companies. I honestly started with some ETFs, and once I felt a little bit more comfortable researching companies, then I started to diversify, and that eventually, the portfolio has changed over time, but as I learn more and more. But yeah, I started in 2019. Great question, guys. So the third question actually is, how come you don't own any monthly paying dividend ETFs such as JEPI, QYLD, DEVO, NUSI, USOI? Be able to speed up your dividend payouts a lot faster with less money. So this is actually a great question, and I was actually very excited to actually answer this one because that is actually one of the things that a lot of people would dive into. So I think this is if you want to own JEPI, QYLD, DEVO, NUSI, all these higher paying monthly dividend ETFs. I think those are for people that are getting very, very close to reaching fire. I am close to, I guess I'm nowhere near getting ready to actually tap into my dividends, so I don't need that monthly dividend paying companies or ETFs to grow my dividend yield. What I plan to do right now is, my long-term goal is to maybe start tapping into them maybe 10-15 years from now, and after that, hopefully. Right now I'm invested in a lot lower dividend yielding companies. These are companies like Microsoft, which if I show you my portfolio here, this is my tech sub pie. A lot of my worth of my portfolio is heavily invested in like Apple, Nvidia, Microsoft, Skyworks Solutions. If we look at the holdings here, unrealized gains, you'll see Nvidia, Apple, Microsoft, AbbVie, Costco. A lot of these have returned me insane gains. So like Nvidia, we invested about $4,200. Honestly, I actually took profits on this, but overall we're up 551%, which is about $23,000. Our cost basis on Nvidia is about $35. Apple, you see our cost base is about $78, and we've been going up and up. So a lot of my companies, if you were to look at Nvidia, Apple, Microsoft, for example, a lot of these companies, they have a really low dividend yield, but they have amazing 5-year CAGRs. I would exclude Nvidia. They're mostly kind of focused on growth right now, but Apple, Microsoft, Costco, all of these have amazing 5-year CAGRs. So I'm hoping that 10 years, 15 years, I'm gonna let that 5-year CAGR continue to compound and compound, and over time, that will create me a really, really great yield on cost, and that'll be towards the end when I'm getting close to tapping into my dividends. That way, that actually brings down my taxes, because right now I will be still working 9-to-5 job, and you know, if I was to get a monthly dividend paying company, I'm gonna actually have to pay more in taxes currently when I don't actually need to tap into that. So that is why I don't really own any monthly paying dividends. Maybe potentially once I'm getting closer to retirement, I could switch some of my positions into some of these monthly paying ETFs, but we will see. So the fourth question actually is, my question is, why are you investing by borrowing from M1 Finance? Isn't risky borrowing money to invest it? So this is actually a really great question. So this is more, I guess M1 borrow is more of like margin. And so remember, with margin, it's like a double-edged sword, right? You can double your gains or double your losses. And so I definitely don't advise to use M1 borrow or, you know, margin if you are not equipped to being able to pay it off, and especially it could wipe your portfolio if you do it incorrectly. But the reason why I actually did it was because there's 2 times when I did it. First one was actually when I wanted to buy JP Morgan. It was trading much less, and so if I actually show you here, I'll show you the activities. So let's go ahead and just type in JPM. If we scroll down, guys, you'll see that January 4th, 2021, we actually bought $4,220. This is actually believe M1 borrow that I used to borrow this, and I actually bought the shares around $120 or so, and JP Morgan was actually, I thought it was undervalued, and the dividend yield currently was around 3% or so. So I borrowed at 2% and I bought that JP Morgan, and then right away, you know, JP Morgan ended up going up in price, and you know, overall we made some pretty good money. So you'll see right here, JP Morgan, we are still up about 10%, so it's not a lot, but remember, my dividend yield on JP Morgan when I bought it was 3%, and then I was only paying 2% on the interest for M1 borrows, so I was keeping an additional 1% in profits as well. That didn't even include the capital appreciation that we could get from JP Morgan. So I think it was a pretty great deal, especially plus you also got the, you know, well, I guess you would get the dividend yield and all the dividend raises that you would get. So that is why I used M1 borrow. The other reason why I used M1 borrow was because I did need to let a family member borrow some money for an emergency, and so only thing I had was my investments. Obviously I did not want to sell my investments just to let them borrow that, because that would also create a taxable event. So that is where M1 borrow was very helpful. So I borrowed at 2%, and then I was able to let them borrow that. So yeah, guys, thanks so much for that question. And the last thing I do want to just briefly mention on this is that just be careful with you know, margin or M1 borrow. Just use it responsibly. But let's go ahead and move on to the 5th question, which is actually going to be, what state do you live in? So I'm actually not going to let you guys know the state, but I'll let you know the time zone. So I'm actually in the Central Standard Time Zone. So yeah, you can probably pick one of those states. The 6th question is, if you were someone in your teens, like 14, 18 years old, should you be more riskier? Also, do you think that crypto is worth the investment? So for the first question, let's see. I think if you're definitely that young, I would definitely be in more aggressive growing companies, especially because you have such a long-term time horizon to, you know, build that wealth. And so definitely, you know, you could definitely make sure that you have a certain percentage. So you could do 50% ETFs like QQQ and VTI, and then the other 50% you could do maybe 30% growth, or, you know, 40% growth and 10% dividend growth, depending on what you want to do. But definitely, you know, you want to be more on the growth side, especially if you're that young. You know, invest in those companies that you think 10, 20 years from now will be very large and will still exist here and will be have a very great moat. The other question, do you think crypto is a worthy investment? I personally am invested in crypto, so I would have to say yes, but that is a personal opinion. I have Ethereum, Actually, I will be revealing my crypto portfolio eventually, so let me know if you're interested in me showing you guys my crypto portfolio. But definitely, I think crypto is here to stay, especially with all the regulations that the government's doing. You know, if they were not doing that, it's not going to be here to stay. So I think it's here to stay, and I definitely have a small portion of my net worth in crypto. So I don't have everything in it, but it's a certain percentage, and in a smaller percentage, I have it in a certain portion that if I was to lose it, it would obviously it would hurt, but it's not the end of the world for me. So definitely just make sure you have your correct allocation and diversification correct. But this was a great question. The next question is actually going to be, what kind of investing account do you hold your positions in? So let's see, individual or retirement account. So actually this is a great question. I do have an HSA, which is a triple tax advantage account. This is for like medical use only. This is provided for your employer if you have the high deductible plan. And so what I end up doing is you can contribute a maximum of $3,600 into this HSA account. So I max it out, and this actually comes out, you actually don't pay this on taxes, and this money allows you to pay for bills in any medical situation. So this is actually really great, because what I'm doing is I max it out every single year, and it reduces my overall salary, so I pay less in taxes, and this medical account grows tax-free as long as I use it in medical, you know, bills or payments, co-pays, medical medicine. And so yeah, and the other thing is I also max out my Roth IRA every single year. I contribute the minimum on my 401k for my employer, just so I can get the contribution. The reason why I don't max it out there is because I'm trying to retire early, and I believe the 401k, it's like you can't tap into it until like after 59 years or so, and I'm trying to not wait that long. So that is the reason why I don't max that out. But yeah, the rest of them are in individual taxable accounts. So yeah, I'm gonna pay the accounts, I'm gonna pay the taxes, but it's worth it because I do plan to retire hopefully before my 40s or the early 40s. So, you know, maxing out my 401k or my Roth IRA early on is not going to help me retire early. Definitely I do the Roth IRA because it is going to be tax-free after 60, I believe. But yeah, this is a great question. How does paying taxes affect your dividend strategy? I let that snowball continue to compound and compound. I don't pull out the money to, you know, to pay the taxes. I just go ahead and work harder and hustle on my other side hustles to make more money that it will allow me to pay the taxes from the dividend portfolio. So I kind of have like a, you know, an emergency fund set aside. It's definitely more than 6 months allocated. So worst case scenario, I try to keep a spreadsheet tracking about how much I'm gonna end up having to pay at the end of the year, and I make sure that I have at least that amount, you know, that I could tap into. But I really don't pull money out of my investing accounts to pay for my taxes. I try to just hustle harder to make more money on my W-2s to just you know, pay that other taxes from my investments. I just want those investments to continue to get bigger and bigger. Let's see, the other question, do you set a percentage aside of, or set a number you think you will owe? Yeah, so yeah, definitely try to like keep on mind how much I'll probably end up having to owe by the end of the year, and I just make sure I have that in my kind of emergency fund. Definitely I don't try to like use all my emergency fund for that, because that is for if I was to, in case to lose my job or something happened. But you know, I try to just not use that. But that was a great question. I can definitely dive into more of this if you want me to. Just let me know in the comment section. All right, so the 8th question is 3 questions. I hope you mention at least one of these. So this one is just asking who told me about this, or I guess investing in general. And so this was actually, I watched some YouTube videos. My brother is into investing, so I kind of heard it from him. But the other thing is that it was kind of scary trying to invest my hard-earned money into it. But you know, over the long term, I realized that you can just make sure you invest in blue chip companies, or you know, S&P 500 ETFs or the QQQs, and you will be fine in the long term, as long as you have a long-term time horizon, and then you know, you will make money. Let's see, the second question is if I can basically make the dividend investing stories for, you know, for the channel. So definitely I plan to hopefully make some stories about famous people that have invested. They have great stories, and so I do plan to do that. It's just that I've been so busy with work, and you know, it's just so hard to make time, but I definitely do have that on the to-do list. The last question is, if I was to start from scratch, what method of investing would you use? I think I would stick to, so basically I have a growth portfolio and this dividend growth portfolio. So I definitely would continue to make sure that a lot of my allocation would be towards growth. And then I would also have a lot of my dividend growth stocks that would pay dividends, because I want to grow that dividend snowball. And it's just very motivating, especially when you see the market red. You guys saw these past couple months, we just continue to see that snowball grow and grow, even though the portfolio went down from like $217,000 all the way to like $185,000. So you know, that snowball continued growing. So that is why I would buy that. I would buy blue chip companies. This is like Apple, Microsoft, Costco, all these great companies that, you know, I know will be here 5, 10, 20 years from now. But yeah, thank you so much for these questions. Again, if you want me to dive more into these questions, let me know in the comment section so I can make dedicated videos for these. Alright, so the 9th question is going to be, there's actually 2 questions. So what year did you begin your dividend investing journey? So this was actually in January 2019, and I'm actually really glad that I started. I wish I had started sooner. You know, I would have made much better gains, but you know, the hard part is getting started, and I think in 10-20 years from now we will be pretty well set off. But Q2, which is I guess question 2, what are your hobbies? So when I do have time for my hobbies, which I rarely do, I'd actually like to program. I like to create new useful scripts, as you guys probably use those, the ones that actually pull data from the dividend stocks into the Google Sheets, and parse your dividend portfolio stuff. I want to actually have some time so that I can try to add some new features that I've been thinking about, and some ideas that you guys have suggested. So definitely like programming on my free time. I actually like to hang out with my fiance, and I also like to actually 3D print stuff, and I actually like to exercise. I actually started P90X, and I actually don't look like this. I'm assuming that you probably pictured this. Definitely do not look like that. I weigh about 190 pounds, so definitely nowhere near that. I'm still trying to build up, but yeah, those are my hobbies. Thank you so much for the questions. Alright guys, so the second to last question that we have here is 1.5% dividend yield seems pretty low. Are you going to be working on trying to increase this yield over time, or are you more concerned about faster growth? So this is actually a really great question. And so my 1.5% dividend yield, that's actually incorrect. It's actually, I believe, 2.5. Let me pull up the Google Sheets and I can show you. So if I show you guys this, my actual true dividend yield is 2.55%. My dividend yield is 1.55%. This was if I was to actually purchase all the stocks in my portfolio currently at the current stock price. So this would be my dividend yield. As you'll see, since I've been invested since 2019, and I've been continuing to dollar cost average, and I've been reinvesting these dividends, my dividend yield is actually 2.55%. And you know, that is pretty great because we've been getting dividend increases. Again, we actually are expected to get, I believe, 6 or 7 dividend increases in the month of April. So it'll be very exciting. This should bump this up a lot higher. So that is kind of where my focus is. I'm invested in companies that have a really low dividend yield, but the 5-year CAGR is amazing for the dividend growth. So hopefully 10-15 years from now, I plan to hopefully have this a lot higher than my overall dividend yield. Remember, this dividend yield is if I was to purchase my portfolio. If I was to dump $202,000 right now at these stocks, this is my current dividend yield, is what it would be. But since I've been invested in the market for a while now, my dividend yield is much higher. And so if I look here, if I look at holdings, and then I actually filter out this by yield on cost, you'll see if we look at these. So Altria, this is the one that matters to me, is yield on cost. This is the dividend yield. dividend yield is if you're to purchase the stock at this current price. So you'll see if we look at this one, AVI, our yield on cost is 6.19% versus the current dividend yield of AVI. So if you were to purchase AVI right now, you'd get it starting at 3.22%, but our yield on cost is 6.19%. So that is kind of like why I really want to grow this dividend growth portfolio over time. This is going to outperform the overall dividend yield. So that is what I'm looking forward to, and that is why I'm invested in 5-year CAGR, well, I guess double-digit 5-year CAGRs, because interesting stuff like this, as well, if I can get invested into companies that have been beaten down. If we look at this one, guys, look at Pfizer. Pfizer's dividend yield right now is 2.90% versus our dividend yield on cost, which is 4.137%. So how cool is that, guys? But that is kind of my goal there, and that is what I'm trying to achieve. So this is definitely a great question. Thank you so much for it. And let's move on to the last question, guys. All right, and the last question is, how old are you and what point will you retire early? So that's the first question. So I am actually 29. I will be 30 this year. So I'm getting kind of old, and then I actually plan to hopefully retire by my early 40s. That is kind of the goal right now. Is your goal to retire early after you hit 1 to 2 million on your portfolio, generating about 30 to 60K in dividends. So that's actually, I hope to, get married with my fiance, find a house, have majority of the house paid off, and then I think I would consider actually retiring afterwards. And 60K in dividends would be amazing. I think we could both live underneath that. So as long as the house is paid off. And let's see, what are your retirement numbers? I think 60K would be in dividends would be amazing, especially since I have my dividend growth portfolio, and then I also have my purely growth portfolio, and then I actually am trying to get better at options. So I think I could live off very, very well. You are on track. Watching these videos keeps me on path for my journey as well. Thank you in advance. Yeah, thank you so much for watching. Thank you so much for the support. Thank you everybody for sticking all the way to the end. If you stuck all the way to the end, be sure to drop a hashtag questions, and that way I know you guys stuck all the way to the end. And while you're down there, go ahead and drop a big thumbs up on the video. Make sure that you're subscribed with that notification if you have not done so already. And again, guys, if you like the subscriber questions, let me know in the comment section so we can do these more often. Thank you so much, and sorry if the video ends up turning out to be very lengthy. Bye, guys.